Have you ever wondered how to build the perfect investment portfolio for 2025? With so many options, trends, and market changes, it can feel overwhelming to decide where to put your money. But don't worry, today I'm taking on the challenge of crafting the ideal investment portfolio using only the latest trends and insights. Stick with me, and by the end of this video, you will have a clear roadmap to make smart investment choices for your future. So, why do investors struggle? Good question. Many investors struggle with creating a well diversified portfolio. Some put too much money into a single asset, like stocks, while others are too cautious and miss out the potential growth. Without the right balance, a portfolio can be too risky or too safe, both of which can hurt long term financial success. The truth is, the market is constantly changing. What worked 5 years ago may not be the best approach for 2025. The new technologies, global economic shifts, and even government policies play a role in shaping investment opportunities. If you don't adapt, you could end up with a portfolio that doesn't perform well. So, how do you build a strong investment portfolio that can withstand markets' ups and downs? Let's break it down with simple steps. The key strategies for success. To build a perfect investment portfolio, you need a mix of different assets. This is called diversification. It helps protect your money. Let's explore the different types of investments you shouldn't consider. Number one, stocks. Growth potential. Stocks, also known as equities, represent ownership in a company. When the company does well, the stock prices go up and you make money. But the stocks can be risky because prices can drop quickly. Smart tip, instead of buying just one or two stocks, consider investing in the index fund, like the S&P 500. These funds include shares from many companies, reducing the risk while still offering growth. Number two, bonds, the stability and security. Bonds are like loans you give to the government or corporations. In return, they pay you interest. Bonds are less risky than stocks, making them a great choice for stability. A smart tip, a mix of government and corporate bonds can provide steady income, reduce risk in your portfolio. Number three, real estate, tangible wealth. Real estate is a great long term investment. Whether you buy rental properties or invest in real estate, investment trust, REIT, property investments can generate passive income and appreciate over time. If you don't want the hassle of owning physical property, REITs let you invest in real estate without buying a house. Number four, alternative assets. Thinking outside the box. Alternative investments like gold, cryptocurrency, and commodities can offer additional protection against inflation and markdowns and market downturns. While crypto is highly volatile, a small percentage of your portfolio might provide significant gains. Just don't put all your eggs in one basket. Matching investments to your goals. Now that you understand different investment types, the next step is building a portfolio that fits your financial goals and risk tolerance. Ask yourself these questions. Am I looking for fast growth, steady income, or a mix of both? How much risk am I willing to take? How long do I plan to keep my investments before needing the money? If you're young and have time, you can take more risk by investing in stocks and alternative assets. If you're closer to retirement, it's safer to put more bonds and stable investments. A balanced portfolio for 2025 might look like this: 50% of stocks for growth, 40% of bonds for stability, 10% of real estate for passive income, and 10% for alternative assets for your extra protection. This is just an example. Your perfect portfolio depends on your personal situation. Keeping your portfolio strong. Once you've built your portfolio, your job isn't done. Markets change and your investments will need adjustments. You should review your portfolio regularly. Check your investments at least every 6 months to see if they're performing well. Rebalance when needed, and if one asset grows too much, rebalance by selling some other investing in underperforming assets to keep your original allocation. Stay informed, keep up with the market trends, interest rates, changes, and economic news. The more you know, the better decisions you can make. To maximize your success in 2025, keep an eye on the key trends: artificial intelligence, tech stocks, AI transformation industries, and companies leading in AI could see huge gains. Sustainable and green investment, clean energy, and environmental social governance investing are growing rapidly. Emerging markets, some international markets like India, Southeast Asia, are expected to outperform the North America. Interest rates and inflation changes in government policies can impact stock prices, so stay updated is crucial. By being proactive and flexible, you will be ahead of the game, making smart moves that align with future of investing. Building the perfect investment portfolio for 2025 isn't about chasing trends. It's about understanding how different assets work together and matching them to your financial goals. Remember, diversify your investments to manage risk. Keep track of the market trends and adjust as needed. Think long term and stay committed to your plan. If you found this video helpful, make sure to like, subscribe to let me know in the comments what's your biggest investment. Let's continue the conversation. Thanks for watching and see you next time.